Well, good morning, everyone. We're going to go ahead and get started. My name is Sophia Nyborg Anderson. I'm excited to welcome you to our webinar today on financial projections. As everyone's getting online, I'd like to share a little bit about the SBDC for those of you not familiar with the program. Essentially, the SBDC program at the University of La Verne is a grant-funded program in part by the Small Business Administration and the California Governor's Office of Business and Economic Development to help businesses get started or grow. And we do this two ways. We offer free workshops and webinars just like this one. And we also offer free one-on-one business consulting by appointment to help you be successful. And if you're interested in our consulting services, you can give us a call at our office. We'd be happy to set you up an appointment. If you have not signed up with us, I'll go ahead and leave the link to sign up as well. And I'd like to get to take care of a few items before we get started. Everyone will be placed on mute to reduce background noise, but please submit your questions using the Q&A feature on Zoom. If you're watching this from Facebook, you can comment in the comment section. And we want to make sure that your questions are being answered, so feel free to use that feature. We will be answering your questions live in this webinar. Josh and myself are co-hosts for today, and we'll be help moderating the questions. And we should have plenty of time to address those. And also, we will be sending a follow-up email, which will include the slides of the webinar, any resources, and also a recording of the webinar. So if you need to leave early, we're going to be sending that to you to the email address that you registered with. And let's see here. All right, with those housekeeping items out of the way, I'm pleased to introduce our speaker for today, Sean Snyder. Sean is our director here at the University of La Verne SBDC. And without further ado, please welcome Sean Snyder.
Thank you so much, Sophia, and thank you everyone for being here. And if you're like me, whenever you join a webinar, you're like, oh my gosh, am I on mute? You know, so everybody's on mute, don't worry about it. I always freak out every time, I'm like, where's the mute button? But we're so excited to have you here today and talking about my personal favorite, financial projections, because I'm a numbers guy. Probably not the most exciting topic when you think about it, all the webinars out there to join in terms of like marketing, but we've got you covered there too. Not next week, but the following, we're going to be talking about capitalizing on Instagram tools. So, but I always feel like you can't talk marketing without talking financials, and you can't talk financials without talking marketing because they're so interconnected. So hopefully the pairing of these two webinars this month will really help move the needle for your business. But as Sophia mentioned, I work with the Small Business Development Center program here at the University of La Verne, and alongside Josh and Sophia and a team of consultants that really help. And it's quite honestly an honor and a pleasure to work with all the different business owners that we've worked with over the years. And I say about 70% of our time is spent doing budgeting because it's one of these, you know it's important, but it's like, where do I begin? Where do I put all this stuff? Kind of like marketing. You have all your ideas, but with financials, like, where do I just put this stuff down on paper so it actually makes financial sense? You can do the napkin thing all you want, but really budgeting out. And that's what we want to walk away with today, is to give you some tools and resources that we've developed over the years by working with other partners and curate and building our own to hopefully be supportive to your business depending on where you're at. And where you're at depends. Everybody on the line is going to be at a different stage. You might be a startup and you might be thinking to yourself, how much is it going to cost to start this business? How much should I pay myself? What can I afford to spend on marketing? How much do I actually need to sell in order to break even? This isn't a nonprofit in most cases. So we got to you're investing your time and your talent and your treasure, I always say, into this business. So you want to make sure it's a viable opportunity. Now, for those that are maybe further along down the road, you're been established for a long time and maybe you're looking to grow and you've approached your lender for an expansion loan, and you may have historical cash flow on your tax returns that say you're doing good. But maybe depending on the industry or the debt service coverage ratio, your lender's going to ask you 3 questions. They're going to say, how much do you need? What are you going to use it for? And how am I going to get my money back, right? So that's where, again, a budget comes into play. So it really doesn't matter where you're at. Budgeting is so essential, and we want to helpfully make that a little bit easier for you. So without further ado, we will pause for questions. I'm anxious to see what kind of questions you guys have, so please don't be shy. I do this all day, every day, and I can go kind of fast. So if I throw out an acronym or something that doesn't make sense, just put that in the Q&A feature. I've already told Sophia, and Josh, just interrupt me because I talk a lot, and I'm going to try to do my best to be concise and to the point here. So first things first, where to even start? Well, we've taken SCOR's financial template, and I've looked at all the different financial projections templates, far and yonder, or however you might say, and there's a lot out there. And whatever works for you, go with it. I personally like the SCOR financial projections template because of the way it's broken down. And what I've done over the years of using it is I've converted it to Google, like a Google sheet, because some people use Excel and on a PC, and some people use numbers on a Mac. So I found Google is a good medium, and it's internet-based, so we can collaborate when we're working with our clients on this. So that's what you're looking at here on this screen. But I know what's going through your mind. Sean, I want to get a copy of what you're going to show us. And I wanted to do that for you. So I'm going to go ahead and I'm going to put in the chat a little link to access a copy of this. So let me do that real quick. This says to panelists and attendees. Here we go. Because we want to get you some good resources that you can use today. And follow up with our consulting if you need. So what I just put in the chat was a link, and I'm going to open up an incognito window because you might not have Google or not Google. You might not have a Gmail. So when you click that link, you're going to see one of 2 things. Oops, I got to do this. Copy X. It should look like this. It's going to take you to the spreadsheet that I'm working on right now, and I'm making a copy. I see some people are already there. Great, good. Don't click this view only. If you're logged in, it'll say request to edit. What I want you to do is I want you to go over to the file icon and either download it as Excel or make a copy if you like to use Google. So that way you can walk away right out of the gates with a template, a place to put your information for your business. And we're going to go through this because you can see, and I'm going to close this and go back to my template. Down here at the bottom, there's a lot of tabs. And I know what you're thinking. You're probably thinking, Sean, I don't like Excel and numbers and so forth. So don't worry, we've got you covered. I've added to the template some video tutorials that will help you through this process, literally tab by tab and step by step. It's not going to be exact to your business because every business is different. And that's what we're going to walk through. But right out of the gates, I wanted to give you this as we get started. So if you're looking at the videos, you do have to double click them and you click play. You'll get a video of me sitting at my kitchen table kind of walking through this because I literally do this every day. So fun stuff, but it's really enjoyable to see the light bulb go off. You kind of go, okay, this isn't that bad. And we can really, if we can make the numbers work, we can probably make a lot of other things work. So that's just kind of like my little intro. I want to give a shout out to the creators of the spreadsheet by SCOR. And we've talked about kind of the uses. Doesn't matter if you're startup or established business. So without further ado, and that housekeeping out of the way, what are we looking at here? We're looking at this first tab down here at the bottom called Starting Point. And really, whenever you're doing a budget or any kind of financial projections, you have to have a place to start from. And so We're looking at a bunch of like basically a balance sheet for those established business owners out there. What I would do if I were working with you, I would say, give me a balance sheet as of 12/31 of the most recent year. In this case, you're probably doing your taxes right about now. You might not have it done, but should at least have an interim, which is pretty much your QuickBooks. And for those folks that are established, you're going to be plugging in basically the balances that are on that balance sheet, because a balance sheet is assets minus liabilities equals owner's equity. So you might have, let's say you own a building, plug in the balance after depreciation, some leaseholder improvements, some equipment, furnitures and fixtures. Not everybody's going to have all of these on their balance sheet if you're established. In my startups, I'm going to get back to you, but you're going to have some. And you want to plug in those balance, the items that are on your sheet. So, but you're looking at a bunch of different categories. And so I'm going to go through this briefly with a Taekwondo studio, because I've never had one. And I've always done my financial projections webinars using a Taekwondo studio in the hopes that maybe one day someone running a Taekwondo studio might say, you know what, Sean, I'm going to take you up on this budgeting offer, but not yet. So I'm through the magic of editing. I'm going to, let's just say we're starting a Taekwondo studio, and we're going to go pretty much with you line by line for a lot of these kind of categories of expenses to just start a Taekwondo studio, brand new startup. Let's say I'm a 3rd degree black belt or higher, and I'm looking to start my own studio. I've been working in the industry, which is key. And now I'm ready to take that leap and go open up my own studio. So walking through these categories can be a little daunting. And some of the terminology might not be what you're used to, using in your everyday language, like leaseholder improvements. So to help kind of speed up our process here, I'm going to go ahead and paste in some basic expenses related to starting a Taekwondo studio. So in terms of land, we don't need to buy any land or buildings, but we may need to fix up the space. And I'm reminded when we first started the SBDC at the University of Laverne, we had a nice space. It's beautiful. You'll have to see it one day when we do go back, on the corner of 3rd and E in downtown Laverne. But we had to come in and do some paint. We had to do some carpet. The carpet needed a little bit of love. Had to drop some electrical lines. This one category called leaseholder improvements is a lot. And so I got, Sophia, Josh, and I were like, how can we help businesses a little bit better? And we created a little list of some common startup expenses, because you can see here, tenant improvements, or otherwise known as leaseholder improvements, the things you might need to fix up, and electrical alterations, plumbing, flooring per square foot. What is the cost? If you're doing hardwood floors, we're doing carpet, what are we doing? Interior walls, closets. We've all probably done some home construction projects. And I don't know about you, but I converted a loft to a bedroom. I was like, that should be like, a couple $1,000s, no problem. I got 3 bids. It was not a couple $1,000s. It was at least double that, if not more. So because when you start adding these things up, they start to add up. And this is where we want to really look at how much does it cost to start this business. And, maybe we can negotiate with our landlord based on the space that we're leasing. Are they going to cover this? Do we have to cover it? This business planning process will, as we go through it, especially with the focus on the budget, we will identify 2 things: the things we know, as well as the things we don't know. And the things we know, woohoo, that's great. The things we don't know, we have to go quote out and research and find those costs and have those conversations. And it takes a while, but we want to basically put together a startup budget that speaks to the real needs of our business. So I'm going to put in the chat another link to this document, but I briefly wanted to kind of go over it with you as it relates to kind of what I'm doing over here on the left side of the screen. So I said $30,000 for mirrors, mat, flooring, paint. I'm just kind of visualizing the Taekwondo studio that my son used to go to. You had a big wall of mirrors so you could see yourself in your form, and it would help with the instructor. There was a big mat, and that had to cost something. You paint the place, paint your logo, your motto, and all those, motivational things. But I can't emphasize enough spending time on the tenant improvements. Check out your competition. Walk into your local competition with a pad and paper. And I love looking around like, oh, that's beautiful. I wonder how much that costs. Oh, that's awesome. But that probably costs a little bit too. Think about this, and you're essentially creating a grocery list of everything that you're going to need to start your business, so that when you press go or you decide to start this business, this is your budget. This is what you go, and you know where to go get it. Hopefully you come from the industry and you know what these things are going to cost. But if you don't, you research. So I talk a lot. I'm gonna pause after we get through this startup costs. And so if you have any questions, throw them in the chat now, or not the chat, but the Q&A. But I'm thinking we got some equipment, some furniture fixtures. We need some chairs for our parents to kind of, sit on if they want to hang out while their son or daughter's doing the Taekwondo. But ultimately, $44,500 worth of fixed costs. Now, these are costs that you're going to depreciate. So another fancy business term, but basically you can write off over a period of time over its useful life. But then we have some other things. So I plugged in here. I don't use pre-opening salaries and wages too much. It's kind of like a soft opening. If you need to bring someone in before you actually open your business and start transacting money, if you need to train some folks. So I put 2 trainers here for 80 hours at $15. General liability insurance. If I scroll down here, let's keep going, because insurance is one of those things that, let's see here. General liability, if I'm leasing a space, my landlord might say, if someone comes and slips on your property, I want your insurance to go first. So in order to sign that lease, I might need to take out a policy. I've got uniforms and belts. When people sign, they join our dojo, they get a uniform and their first white belt. And LLC formation or some sort of corporation setup and a lease review. Very important to have like someone with a professional background look at your lease and looking at those paragraphs, what you're signing. Because leases, think about it. If you're signing a lease for, let's say, in my case, I've said first and last month's rent or $2,500. That's $5,000 just for a deposit. In some cases, every situation is going to be different. But let's say it's $2,500 times 12 months a year times 3, maybe 5-year lease. The numbers start adding up, and that's what you're on the hook for. So hopefully you've thought this through. The space is good, and you really like it. But first, a deposit. That's the money you're giving to somebody. That's going to be an asset on your books. So I think, did I set this here? I don't think I included it, but I would definitely include like spending some money to have like a good bookkeeper or somebody sets you up right. Because if you're going to spend all this money to start a business, granted, every business is a little bit different. If I was starting a consulting business, it's just me and a computer, right? It's not that heavily capital intensive. But if I was going to spend all this money that I'm looking at here, I would probably want to make sure I get my books set up, because what I see is a lot of businesses that are just getting started kind of omit that, and they just kind of wing it, and then they have to go back and fix a lot of things. So I might actually throw in an extra little bit here. I'm going to say 1,000, let's see here, equals 1,000 plus, I don't know, $500 for QuickBooks setup. And do use this notes section if you can, because a lot of times I'm working with clients and they don't remember where the numbers came from. It's like, I'm like, how'd you get to that number? And they're like, made sense at the time, but I have no idea right now. So hey, track along. Oh, go ahead.
Can you please put the link to the startup costs PDF in the chat, please?
Absolutely. Thank you.
Thank you.
I'm going to do that right now, because this one, I'll be honest, this is something I'm really proud of that we've created at the University of La Verne SBDC. It's not an exhaustive list, but it is definitely a good place, because I think when you're budgeting, especially as a startup, and I know I'm showing a lot of love to the startups right now, so for my existing businesses, forgive me, but you remember what it was like when you started up. You didn't know what you didn't know. And the only way to know what you don't know is to do some reading, talk to people. And so I did just that. Working with the business owners, I try to curate a list based on these categories of things to think about. Now, a lot of them might not apply to you. maybe you're not selling inventory, so that you can just skip over that, but at least it makes you think about it and go, oh, yeah, we do need some inventory for those belts and those uniforms. So just down here, I've got rent deposits. Utility deposits is kind of an interesting category. And I always thought to myself, what is this? And essentially, we've all rented an apartment, right? And if you don't have the best credit, they might require a little deposit. And that deposit is pretty much 1 month's electrical bill for that facility based on, let's say, a year's worth of history. So, I threw in $500 here for electrical, water, but hopefully all that's set up. And electrical, if you're like a dentist or something, that's important to think about when you're picking a space. Does your x-ray machine use one of those 250-volt kind of plugs, and what are the breaker situations? But especially for our doctors out there. Supplies, paper, ink, basic stuff. $3,000 I plugged in here for a website and a grand opening with your chamber. Definitely, if you're doing a brick and mortar, you definitely want to get introduced to that community. This is going to be your new home. And I can't say enough how our local chambers are just awesome resources, not only for doing the grand opening stuff, but also for just connecting with some of these other professional service providers, insurance agents, commercial leasing agents, bank partnerships, CPAs, attorneys, you name it. I mean, good stuff. So I plugged in here city business license, but I might up that as well if I had to do all those tenant improvements. Are there any permits, to construct based on the city? I didn't throw in here little things like alarm permit. Every city is different, and so this is where we often have a pretty healthy conversation also for startups that need help with licenses and permits, because it's a little daunting. But the last thing I'll mention is that most people don't consider a startup cost. It's cash on hand. You might be able to, cover all these expenses, but your business is going to need a little bit of money to start with. And right now I've plugged in $20,000, and we'll find out if that's going to be enough to actually be sustainable. But so a lot of people don't think of that as a cost, and it really isn't a cost, but it's a contribution to the business. When you go open up a bank account, if I'm your banker, I'm going to say, congratulations, you now have a bank account. What would you like to deposit into that bank account? And if you go, well, nothing, then your business has a big goose egg to start with, and it's just going to go down from there. So you got to have a little cushion to work with. And we're going to look at that and some of the cash flow needs you might need for your business. Now, we basically said, and I'm going to pause here in a minute because this is the end of this startup point. We basically said it's going to cost us $79,400 to start this fictitious business, this Sean's TKD. Where is that money going to come from? Now, this is a really important question and answer to know. So hopefully it came from the industry. You've been saving up. Let's say, I don't know, I'm just throwing out an example, $50,000 is going to come from us. And then the difference, the $29,400, I don't know, just to show you how the spreadsheet works in case you do have liabilities for those business owners that are already established, or for your startup and you're going to be approaching going for a micro loan, let's say. I wouldn't recommend starting your business on a loan. I would definitely recommend saving that money or talking to friends and family to get that injection, but because you don't want to add debt to the business like right out of the gates if you don't have to. But we're going to say we're going to get a $29,000 loan, 29.4 at 10% over 60 periods or 5 years, which gives us a $625 kind of a month payment that we're going to now factor into our expenses because we got to pay the bank. So this, if you will, is our starting point. This is a good thing to resource to think about in terms of your startup costs. And a lot of people just jump right to sales minus expenses. And that's really the two rules of business, or not rules, but it's sales minus expenses equals net income. So I fully respect that. But you got to, for my startups, you really got to back up for a moment and go, okay, what are the capital expenses that I'm going to have to cover before I even sell one of my widgets or I take on one student? So for there, I will stop and I'll make this a little bit bigger, and hopefully I haven't thoroughly bored everybody just yet. Sophia, do we have any questions or should I just keep going?
Yes. So, Brittany asked, will we be able to receive a playback of this webinar? And I want to answer by saying yes. We're going to be sending everyone a follow-up email to the email address that you registered with. That will include all these resources, all these links, and also a recording of this webinar. And the second question, Felicia asked, I don't have Excel. What format should I save this spreadsheet? If you have a Gmail account, you can save a copy of this file to access the document. And if you need an additional assistance, give our office a call. We'd be happy to set you up a copy, send it to you, and I'll leave our number and email address in the chat as well.
No question.
We have another question. Are the documents you are filling in still going to be on our docs? I have a copy, but also what are you currently doing?
Good question. So what I'm doing on this spreadsheet, because up here at the top right, you can see a lot of people that are already logged in. So they're on a view only basis. So they're going to see whenever I change something. If you want to make your own copy, you're going to go to File, Make a Copy if you're logged into your Gmail account, or if you're not, download it as Excel. To the question that it was a very good one. If you don't have Excel, you have a Mac and you're using Numbers, you can try to like download it as Excel, but then open the Excel with, we'll definitely connect with us afterwards. I think Sophia answered that perfectly, where we can send you a link where it can just be web-based. You don't need Excel or even a Gmail, but hopefully that answers the question. So you will be seeing, if you're looking at it live, you will be seeing me enter the information. And so, but we really want you to have a copy so you can work on it for your business. This is just to give you access to make your own copy. Any other questions?
Yes. Somebody's asking, can we dive into the startup costs?
Yeah, I'd be happy to. Any area of startup costs, because this is really where I kind of put, and it's going to depend on your business, right? You got, all these different categories, and you got to kind of like Google and research, talk with your SBDC consultant. Do I need a burglar alarm permit for my city? Probably if you have a commercial location, but not if you're a home-based business. Instead, you might have to have a home occupation permit, which is listed up here. Hopefully you don't have to have a conditional use permit. Those can be pretty pricey, and well, sometimes maybe, not at all. You have to get that approved. But this is where you're going to go through this stuff. And really, I want you to emphasize, we're here to help you on a one-on-one basis to do this with you, not for you, with you, because we want to teach you how to fish, so to speak, rather than give you the fish. We want to be alongside you when you're going through and researching this stuff. And we kind of play devil's advocate in our consulting. Like, did you think about malpractice insurance? If you're a dentist or a doctor, and you probably know that stuff if you're in the industry, but we just kind of take what we learn from all of our clients and we pay it forward to others as they're starting their business in a way that's supportive. But this is my best resource for startup costs, and in addition to just meeting with a consultant.
Okay, and then we have one other question. When I downloaded it, it was blank. I would love the numbers.
Oh, okay. You have the link. So if you just click the link, it'll take you right to the spreadsheet with the numbers. But once you download it, you will make a copy so nobody will be able to see any changes that you make. So if you want to see the numbers again, we can include that maybe in our follow-up. We can have the example, Sean's TKD. Sorry, Sophia, I'm giving us tons of work.
No worries. We'll definitely include that in the follow-up email.
But I just really wanted to get this out in the hands of our attendees, because it gives you a place to put the numbers, and then you'll see that it formats them in an organized fashion for a cash flow statement, an income statement, and balance sheet, and most importantly, a break even. So we'll stop at the next stopping point. Is that good for now?
Yeah, we're good. Thank you.
So the next thing, and the reason I like this spreadsheet, or the one that SCORE has created, is largely because it breaks out payroll separately from from the operating expenses, because payroll really is just another operating expense, but it's so large generally for most businesses that I like how it separates this completely. Because payroll, let's just say, let me do a little through the magic of editing. I'm going to copy and I'm going to paste over here. Let's say we've got Sean Snyder. I did not copy the whole thing, so let's just say one person basically working 25 hours for 40 hours a week, and voila, there's my wages. In addition to the wages, you also, if you're an employer, you will have to, and you have employees, you're gonna have to pay payroll taxes. So we've got down here some respective rates, and this base limit may be a little out of date because it's a little old, but pretty much when you're an employer, you have to pay payroll taxes. You withhold a portion from your employees and you match it. A lot of employees don't realize that their employer also matches what their deductions on the payroll, Social Security, Medicare taxes are. And I don't want to get into a big, long conversation about taxes, but the important thing is you budget for it. And they're usually driven by wages. So the wages multiplied by these respective rates for Social Security, Medicare, FUTA, SUTA. It has other categories, but you can see they're zeroed out. And a big one that I would highlight for your business would be workers' comp. If you have an employee and an employee gets hurt, I mean, think about it. We're doing Taekwondo. We're working with nunchucks. We're kicking. We're throwing punches. Someone's bound to get hurt. And if you don't offer healthcare, it's a mandatory requirement that you carry workers' comp insurance. And that's going to vary business by business, but also position by position. You know, you think about a chef who may be working with knives in the back of the house, might cut himself or herself, versus a hostess individual who's just kind of walking people to and from tables and kind of playing, organized coordination. Very different roles. So it's important to factor these costs. And I love how it does this. Let's say I'm working 40 hours a week. I want to get paid because, and then we have another instructor working full-time, and then let's say an assistant instructor working part-time. But I kind of go through this with a wish list mentality the first time, especially for my startups. But for my established businesses, I'm looking at history. So what are your employees? What are the rates? And we can budget for them as much as possible, as accurately as possible. But really, these are our assumptions. All business plans or budgets are built on is just assumptions. The numbers then come from the assumptions. So if we're saying we got one person at $25 an hour, that gives us, it's just multiplying this times 52 weeks a year, or what the formula is here. And then we got our payroll taxes. So we are already, for this startup business, we have $10,000 worth of payroll to contend with. Pretty big chunk of change. And this is why I really like this spreadsheet, because it breaks out payroll separately. So I will stop there. I think that you can add in your own health insurance and other kind of employee programs that you might have, but I'll be honest, most clients, I'm just working with these and then workers' comp. But any questions on payroll? Let's keep rolling. All right, pretty straightforward, but this is the key. Rates and hours per week, and then, keeping an eye on that. So now I want to kind of switch gears a little bit and talk sales, because remember, sales minus expenses equals net income, and hopefully we have something left over. But in terms of sales, for my established businesses, I'm usually looking at your prior past performance. A lot of people categorize their expenses, and we're going to get to that in a minute, but not many people categorize their revenue. And not to say that you have to, but when I work with really advanced, and I'm talking like, well-established, businesses, they have pretty serious sales goals, and they have them broken down in terms of who's responsible for what. But let's take our Taekwondo studio as an example. And let's say, I don't know, monthly tuition, because we're selling, basically like a school. So we're teaching people how to do this art of Taekwondo. And the units, this is the one that throws a lot of people. The units is pretty much just students. Students, can't spell, so please forgive me. This is the circle of trust, right? I use spell check, so don't tell my son, But so how many students? And then what do we charge? Um, we charge 120 bucks a month, let's say, a purely fictitious example. And we really don't have a cost of goods for this particular product. But if you have an inventory business where you're, buying, I don't know, phone cases, and you buy them for $2 and you sell them for $5, then you have a cost that's variable there. Every time you sell one, you have this additional cost. But in our case, we're teaching students. And then let's say, I don't know, just throw in some other revenue projections. Let's go with belt tests, because when my son was doing Taekwondo, it was about $50 a month. I don't know, it was like a month every 2 months to take a belt test to get from white belt to yellow belt, from yellow belt to orange belt, and so forth. But a studio might have, let's say, other revenue sources, like we do birthday parties. I'm trying to think of other things that they might do, but this is where you get creative and thinking of other ways to make use of your facility or your business. But I want to point out there's kind of 2 boxes here. And again, you have your videos over here for startup and existing, depending on which track you're following. But this one I really just kind of call your menu box. Like, what is it you're selling? For a mechanic, it might be parts and labor. For a restaurant, it might be food and beverage. I mean, don't get too nitty gritty with like, oh, well, we sell pies and we sell crepes and we sell, all the little things. Like, I would look at your menu and I would look, okay, what is the average ticket price? I would review your sales data and, say the average to go order was $15. The average dine-in order was 25. I don't know. Coming up with some assumptions about these costs is very, very key. And basing it on either your industry experience, your point of sale information, or whatever CRM you might use in your business to be able to track that and validate it. Because we might be right on point, we might be out in left field, but until we have something to back it up against, we don't know. So again, this is where industry experience really comes into play, but also using the technology that's out there. A lot of mechanics have, I can't remember the name of the software, but they track parts and labor pretty religiously, so to speak, and they mark things up and so forth. But keeping it simple, but keeping it accurate. And then we got our menu. What are we selling? And then down here we have a box that's pretty intimidating, but really it's just how many units are we selling each month. And for sake of example, I'm just going to say we're going to start out with, let's say, 30 students, because like when we know 30 kids that will come to our dojo, like day one. And then let's say through our reputation, we are going to add 5 students a month for the first year. And we'll drag that down. So we're basically going from 30 students to 85 students. Now, 2 things I would say here. One, I don't see any seasonality. It is a startup, so I do see some steady growth. It's not just like, boom, we're starting with 150 students. We're being realistic. But the seasonality, I might expect a big jump in, the months where days are longer, kids are out of school, parents are going crazy, and they need a place for their kids to let off, to learn and to be part of a social and structured interaction when they don't have school. Just saying. But that's kind of what I'm thinking here. But let's just say another assumption might be 20 belt tests. And again, it doesn't matter if there's belt tests, widgets you're selling, trucking. I work with so many different types of businesses, and it all follows the same rules. What do you sell and how much do you think you're going to sell each month? And yeah, you can make it even, Steven, and look at the annual, but when you really want to develop some sales goals and really improve your company, you really want to hone in on this and then develop a strategy. How are you going to get 5 students a month, every month? Oh, we're going to run a really aggressive Google Ads campaign where we know our cost per conversion is X, and as long as we spend Y, we get it. I mean, I was just working with a moving company, and it was really interesting how much they spent and how dialed in it was. And that's going to take time. So don't think you need to be at that level like right out of the gates, but having some baseline strategy and assumptions for what you think you're going to do. And it's better to be pleasantly surprised than mildly disappointed. So be, I won't say conservative, but just be real with yourself. There's 3 rules to doing this business plan. 1, keep it simple. 2, be real with yourself. And 3, do it yourself. I was about to forget the third one, but don't let someone else do this for you. This is where even you met with me. I would love to do your business plan because I know exactly what needs to be done. But then it becomes my plan. And you have this pretty document at the end that really doesn't mean anything to you. It's the planning process that you go through when you put together a budget, or what most people refer to as a business plan. That's the important part. So don't forget that. And use this when you come back. If this was March, I know we're in, what is it? We're in March already. So how do we do in February? Did we actually hit that? And if not, what are we going to do to adjust? So I will stop there, but you can see here, you got up to like 6 sections in this plan. As we filled in monthly tuitions, it filled in down here. It's got little formulas. Try to be careful not to override the formulas because it does mess things up. But these dark bars, basically, whenever you see this color, it means you need to enter in information. If you see this lighter color, it just means adjust as needed. That's kind of the short on this, but it will add it up top to bottom. And we're looking at about doing 4,600 a month in the first couple months, down to 11,200. But we're tapping out for the year about 94,800. So this is our sales budget. And this is where most people, I'll be honest, this is the hardest part. And for my startups out there, my mother would always tell me it's like making spaghetti, or, she would tell me about making spaghetti. I can't cook. I'll just be honest. And she would say, when you make spaghetti, you throw it against the wall to see if it sticks. And if it sticks, that means it's done. If it doesn't stick, I guess it's not done. But this is kind of like our example of that when it comes to business planning. We're just throwing numbers out at this spreadsheet to see what sticks. And we're going to get back to the strategy component in a second, but I'll pause here for questions.
All right. So we have a question regarding paying yourself as an entrepreneur. How should we pay ourselves as the owner of the business? I'm trying to separate myself from my business so to be a successful business and remain financially structured. What is a proper way to pay ourselves?
Proper, I don't know if I would use the word proper. It depends on how your company's set up. For example, S corporations, if you're making, one of the rules is to pay yourself a reasonable salary. So my technical answer would be to talk to your accountant. But in all honesty, to answer your question, you can pay yourself 2 ways generally. You can list yourself as an employee like I've done here, and I'm paying payroll taxes on this wage that I'm paying myself. Essentially, I'm doing a salary or time card situation, but I'm an employee. Alternatively, and we will get to this in a second, you can take you can budget for yourself for like sole proprietors as what do they call it, an owner's distribution or an owner's draw. So we're gonna get to that when we look at the cash flow statement, because at the end of the day, as an entrepreneur or the owner, you're the last to get paid. So if there isn't money in the bank account, who's getting cut? So great question. And I'll show you that in just a second when we get to the cash flow statement as well. Any other questions?
Can you briefly mention common pitfalls about budgeting?
Not doing it. It's one of those things that's like budgeting. I know I need to do it. Or not reviewing it. Like you do it and then you don't ever look back on it. And I'm the same way, but I at least look at my budget quarterly, and I review it. I like to say monthly, but it depends on where you're at. But common pitfalls would be not doing it, not looking at it, and perhaps not understanding what went into it, like the assumptions. Those would be the big things, because I work with a lot of business owners, even on their balance sheet. You don't run your balance sheet that often, but when you apply for a loan, going back to our starting point tab, I'm usually pulling figures from their balance sheet and plugging them on the starting point for my established businesses. And I don't know how many times I'll meet with a client and I'll say, oh, you have a $50,000 loan from the shareholders. What are the terms for that? Do you have to pay back a certain level of interest and stuff like that? And they go, what is that? I don't even know what that is. And you're like, it's on your books. So I guess that just kind of goes back to looking at things. But sorry, I'll stop there. Any other questions?
Another question is, I do understand we need to build this budget for ourselves, but what do you offer one-on-one? What I don't know, I don't want to make a huge mistake.
Well, don't let the fear of making a mistake hold you back from doing or from making the attempt. I guess that's what I would say. That sounded really good. We should quote that. Can we get like a quote somewhere? But because it's all about effort. I mean, as an entrepreneur, you're constantly learning. So how we help you is we kind of ride alongside you in the sidecar, if you will. We're not going to do it for you. We will give you the resources and we'll coach you. I mean, I've got videos here that will literally walk you through exactly what I'm doing here so you can kind of do it yourself. Because at the end of the day, this is your budget. This is your business plan. And we want you to be able to adjust should it do better or worse than what you thought, because it's just a bunch of assumptions. So we're here to help you think about things maybe you didn't think about, play devil's advocate, as well as other resources. I mean, from marketing, we have Louise, who's a great consultant of ours, to buying businesses, to selling businesses. Malcolm focuses a lot on that. I mean, the budget is usually just a starting point, and from there it kind of flourishes because numbers don't lie. A lot of people ask me, will this work? And I say, I don't know. Let's do the numbers. And then ultimately, can you hit these sales goals? Your customers will tell you if your business is going to work. It's up to you then to cultivate a community around that and make it solid and know what you're good at. But we have consultants that have run businesses themselves. And so they kind of share a lot more of the anecdotal side and empathy with you.
Okay, and then we have another question. How often do you update or change assumptions?
Quarterly at a minimum, to kind of see where you're at. Monthly, you're definitely reviewing things monthly. So running your income statement and balance sheet. Most people just look at the income statement, but it depends on the business. If you're in a cash crunch, you're doing this weekly. You're making sure, do I have enough money in the bank to run payroll? And if anybody has employees, they know what it's like to see that many zeros go in or out of their bank account. So I guess it depends on every business, but in their situation. But cash crunch, count your pennies, let your dollars count themselves.
And then we have another question. Can you explain what are the category breakdown and total columns about?
Oh, okay, great question. I don't use these too much, but this is a really advanced kind of it's looking at our total sales and our percentage. So right now, and we're going to get to this, so keen eye here, 74% of our sales is coming from our student tuition versus 25%. So we got like kind of a 75-25 split. And if we had a better margin on one product than another, that might tell me, hey, we need to be selling more of this than that. So this is kind of the column to look at in terms of overall sales. Like we said, we're going to make 94,000 down here, 800. Well, this is just basically telling us of that 94,000, this particular revenue stream is representing that percent. And this is where you kind of look at your cost of goods and kind of go, okay, if I'm selling a bunch of different widgets and I get one better profit margin over another, I might want to focus on that one, depending on the situation. But great question.
All right.
Well, I think that's a good spot to keep moving. Yeah. And where are we at on time? 10:46. Okay, good. We're making good time. And I love the question, man. Okay, I really wasn't sure of what kind of questions we were going to get, because you think about reviewing a spreadsheet, like, wow, how boring can that be? But this is really good. So keep them coming. The next one is because we're almost done here. What I love, this tab 4 is additional inputs, and a fancy way of saying, right, your accounts receivable, how quickly you get paid, and your accounts payable, how quickly you pay your vendors. Most businesses are going to be like a cash-based business where same time, I don't know you pay me at the time of the transaction, like a restaurant, and I pay my rent at the first of the month. So there's no terms, but for my manufacturers, or other kind of maybe construction companies where you might, deliver the service and then get paid in the rears. Consultant would be a good example. I meet with, clients all throughout the month. I send you the bill at the end of the month. You pay me within 30 days. So there's that lag time. Important to consider, especially for my startups, but generally, once you get over that first month, like changing jobs, you have a big, okay, you need to float this cash flow for a while, but then you kind of move, you get to a regular kind of cycle, unless you lose a client. So But one that is kind of interesting to think about is that throws people for a loop when I say, how much do you want to keep at the bank at all times? Your minimum cash balance. And everybody has a different kind of threshold for how low they let their bank account get. I mean, some people might say, shoot, Sean, I overdraft every month. And others might go, you know what? I want to keep a couple grand there because, that way I avoid the fee. But one thing I throw out there is things that can't be paid with a credit card, because the spreadsheet will kind of assume you have an indefinite line of credit, which isn't really the case, but it will help us from a budgeting standpoint once we get to cash flow. In our case, we're saying 8%. But what are those things that you can't pay with a credit card, or let's say worst case, a cash advance? And I'll go back to payroll. We have $10,000 a month that we have to pay if we're paying ourselves and our 2 instructors. So what I might suggest here is, at any time we want to keep at least 10 grand in the account. Like, that's our threshold, because we want to have maybe like 1 month's rent or payroll or these things that we don't want to necessarily take out a cash advance and pay like 20% or whatever that rate might be to get that fronted to us. So an interesting figure here. We'll see how it works into the cash flow, but you could put 0 theoretically. Additional fixed assets. This I don't use too often, but if you were planning to buy a truck or do some leasehold improvements, you could actually plug in those figures here, because those would be depreciable assets, and it kind of adds to your depreciation, because depreciation is just a non-cash expense to write off the usefulness of something over its useful life. And then the last thing here is if you're like a sole proprietor, your income tax. So when you make money that's not subject to income tax, you have to pay, self-employment tax and other taxes. So this is going to be based on person by person, or, even how you're set up. So for example, let's say I was an S corporation and I have 1.5% at the state level for income tax, because you're going to file a tax return for this business. And so it will even factor in those taxes. And they have a funny, an interesting expense here, or amortization, because if you're a startup, you can amortize your startup expenses. So it's always good. If you're starting a business, keep those receipts, not just because you need to, but because then you can actually write some of these off and talk to your tax preparer. But if you're an established business, I would just zero that out, because most of the time I think there's some rules around how long you can write it off, and generally people do so pretty quickly. But that is it. And the big thing about tab 4 is, how quickly you get paid. Is there any lag time? And your cash balance. So I'm going to go now to operating expenses, and then we'll pause for questions. And this is what most people think of, when they think of the budget. You got your sales budget, and then you have your operating expenses. And again, just like startup costs, we've got you covered. So I'm going to put in the chat, and I'm going to bring it up, some common operating expenses, because when you look at these categories are essentially the line items from a Schedule C. Advertising, car and truck, commissions and fees, and they all make sense. It's kind of like, yeah, Sean was saying a lot of words, but what did he really mean? And then here, to get to that significance of the meaning, I created a little spreadsheet, just like the startup cost, to help you kind of think like, hey, do I need this? Is this something that applies to my business, or that I should budget for? Because even when you think car and truck, it's like, well, are you using your personal vehicle and you doing a mileage log, or are you doing it's 100% for business and you're writing off all the gas, the repairs, the taxes, and registration fees? Those little things you're like, oh yeah, I have to pay that every April or every October. So I'm gonna put this in the chat. Let's see here. I gotta move all these boxes around. And this is my document for common operating expenses. So you guys can have that for your nighttime reading. Commissions and fees, the credit card swipey transactions. If you have like Square or something, 2.75% and a 30-cent per transaction fee. If you have referral fees, heck, if you're a franchise, you have to pay royalties. So I kind of put some ideas to consider here. Contract labor, do you have my brother has a business in Atlanta. He swears by his virtual assistant. Like he's just a big believer there. He says, so he's got a bookkeeper, he had a management consultant. I mean, for a while, remember he had like a coach he was paying. Insurance is a big one. You got all different types of insurance, and some might apply, some might not, like malpractice. If you're not a doctor or something like that, maybe you don't need it. But interesting thing, we had a consultant here at the SBDC who really emphasized key person insurance for partnerships. Like if me and Sophia are going into business and then I die, it's like, I was really critical, let's pretend, Sophia, like I was critical. You could do this without me. But, there's insurance for that. So there's all different types of expenses to even think about. And I try to kind of list them out here to go, oh yeah, nah, it's up to you. I'm going to go ahead and drop in just for the sake of example. Let's go with a couple expenses that I've listed here for our budget purpose. Copy. And I'm going to go back here. I'm going to make this big again. And I'm going to paste that. So in my example for today, I'm saying we're going to spend 150 bucks on, advertising, but that could be everything from, let's say, my, email marketing software, my website. I don't know, we're running some Facebook ads or some Google ads. A lot of people probably heard about this webinar from Facebook. Well, we ran an ad. Sophia is like the queen of Facebook ads. She can teach you something. So you probably heard about it on Facebook, if I had to guess. Show of hands. I could, yeah. I plugged in here $100 for contract, contract labor, like a bookkeeper. Let's say we don't like bookkeeping, so we're going to pay someone. I plugged in $500 to file our taxes in April, and $800 because we're a LLC or a corporation. In the beginning, I said we had rent of $2,500. That may increase by 3 to 5%, a certain month. So in the next year, we could budget for that. And then utilities. So this is just a very basic example that I'm just kind of using to kind of get the conversation going. But I would definitely recommend looking over this to see what your major expenses are so we can plan for them before we need them, because cash is king and cash flow is queen. If we run out of cash, then we're dead in the water. And we want to make sure we budget for them in the cash flow cycle so we can account for them in advance, like those pesky tax payments or tax return prep. But because the way I look at it, and we're going to get to this in the cash flow statement, cash is like gas in your car when you're going on a long trip. Your trip is over 12 months. And if you run out of gas, you're gonna be on the side of the road hurting and asking for, a lift, right? When was the last time any one of you picked up a hitchhiker? Probably not anytime soon. So think about that. Like if you run out of gas, you're asking for more cash from a bank. Bank's gonna go, maybe not. So we want to plan for things before we need them to show not only if we were raising money that we know what we're doing, but we don't get into a bad situation. But things happen, and that's why we plan. So I will pause here for questions before we get to the main event, which is the cash flow statement. And from here on, we have pretty much done everything in a budget. And I'm going to share with you kind of the fruits of our labor. So any questions so far, Sophia?
Yes, we do have a question. Can you please go over one more time the lighter colored lines and the darker colored lines and how to use them?
Absolutely. And a great question. As you're going through the spreadsheet, you're going to see areas that are white, if you will. Those you don't need to worry about. And actually, I skipped over that. So I'll use this as a good example to mention. These white cells, if you will, as you're developing your budget, are cells you don't even have to touch. They are formulated. So you can see when you click on it, it's going to have a link up here at the top. It's linking to somewhere else in the spreadsheet. So you don't have to worry about plugging in that formula. It will automatically calculate it, whether it be depreciation or in this case, commercial loan interest, not the principal, but the interest is a reasonable expense that you can deduct from your business. but these darker cells mean you need to plug in information as it applies to you. And as you change this supplies, let's say we have $50 for supplies every month, you will see it change to a lighter color once Google catches up. I'm faster than Google, but right, it should change. Okay. Maybe it doesn't, but don't worry about any of the white areas. Just worry about like the darker colors. That's really where the spreadsheet who created this, the person or persons that score, kind of made it a little bit easier for you to focus. Just focus on the colored areas and in terms of your input. But everything else, like all this sections over here, will just automatically roll up. But if you mess it up, that's where I always like to make a copy. And you, with Google, you can even restore it. See, it says last edited a second ago. If I click on this, I can actually go back to when it was first created and stuff like that. So not to get too technical, but you will, don't be afraid to break it. Any other questions? I think that's funny.
Not at this moment.
Look at it. When I was trying to prove a point, it did not work. Why did that not work? The math works, but no more questions?
No, we're good right now.
Well, this is it. Ladies and gentlemen, let me introduce you to and I kind of skipped over 5B. You have different, categories. You don't have to worry about the B's so much. I really just focus on the first 12 months of any business, whether you're starting a business or growing one, because anything outside of 12 months, although this business plan, this budget template will give you year 1, 2, and 3. It's really just taking year 1 and multiplying to get year 2, year 1 by a certain percentage. Because honestly, who knows what's going to happen even in 12 months? That is a long time in the world of business. So this is the cash flow statement. And this is what most banks are going to want to see to show that you can answer the third question. First one was, how much do you need? Second one was, what are you going to use it for? And the third one is, how am I going to get paid back? Well, this cash flow statement answers that one for the established businesses. For our startup businesses, it essentially will answer the question, is this even feasible? And let's go through it because it's pretty straightforward. It's like reconciling or not reconciling, but what do they call it? With your checking a checkbook. Help me out, Sophia. What is it called? Like when you balance your checkbook. There, sorry. I have never done that. So I can manage a lot of money for business, but when it comes to personal, I am like the worst. So you got to be real with yourself too when you're doing this. But let's see here. January, let me see if I can make it a little bit bigger. Sorry about this. In January, month 1, let's say, we said we're going to start out with $20,000. Now that came from our beginning balance. We said we were going to open up the bank account and drop in 20 G's, right? Woohoo. Or we had a balance existing of about 20,000. Now, with a cash flow statement, you got to look at the cash that comes into the business and you got to look at the cash that goes out of the business. So first, we have 4,600 that came from our sales projections. That was 30 students at $120 a month and 20 belt tests at $50 a month. Add them together, top to bottom, 4,600. All right. So woohoo, we brought in 4,600 and we said we get paid in the same month. So we didn't have to wait for that money. It was right up front. Now we have to look at the cash that goes out of the business, and it goes out in a couple different ways. We didn't have any costs of goods, but we could have plugged in, let's say $3 for the belt tests. But in this case, we don't have any costs of goods. We do have some operating expenses of $2,900, which we just did together, which was $150 for advertising, $100 for our bookkeeper, $2,500 for rent, and $150 for utilities, giving us $2,900. Definitely need to flush that out a little bit more, but that's where we're getting that number from. And then our biggest ticket item is $10,053 in the form of payroll. That is coming from our payroll tab. We have 3 employees at their respective rates for the respective hours per week, including their payroll taxes. So we have 9,000 in wages and basically 1,000 in payroll taxes. So giving us our $10,000. Then lastly, we said in the beginning, we had a liability, or we're going to take out a loan, and there's that loan payment, principal and interest, because we're talking cash now. You can only deduct the expense for the interest, but we got to be able to come up with the full amount for the loan payment, which we said in the beginning was $29,400 at 10% over 60 periods or 5 years, giving us a monthly payment of $625. We add all those up together, we get $13,000 of expenses going out of the business. So basic arithmetic, 4,600 coming in, 13,000 going out. We have a negative cash flow of $8,977 that we take away from our beginning balance of 20,000. 20,000 minus the 897, or the 8,000 or 9,000 gives us an ending cash balance for the month one, leaving us with 11K to start the next month. And it's a rinse and repeat. Now I'm going to zoom out a little bit because I want to show you something. And I apologize for scrolling up and down. I'm trying to hopefully not make anybody too dizzy. But what I see here is we said we were going to keep a cash balance of $10,000 at any given time. But the spreadsheet, or in our budget scenario, I'm seeing a line of credit that is going up, going up, going up, going up, and never stopping. What that tells me is we are not selling enough at any point in time in the year to cover our expenses. So again, when we go through it first pass, wish list, like, we're, I don't know, I was going to say write a letter to Santa or something. We want everything, right? But so now we have to kind of go back through it and say, okay, we can't afford all that. What are we going to do? Because there's only 3 ways to grow a business: increase sales, cut expenses, or improve your margin. We have 100% margin in our situation here. We have no cost of goods. So our margin is 100%. So that's already off the table. So then, yes, most people, we could easily adjust these numbers to make you look like you're profitable. But if you don't believe in those numbers and starting out with 30 students and going to 85, then that's not really going to work. Just changing the numbers to make it work isn't going to really make things good. And then the last part is operating expenses. Our operating expenses are pretty, aside from payroll, these are pretty bare bones. So then we go down to payroll. Let's see here. And maybe we can't afford, to pay ourselves. I think I want to go back to that question that was brought up earlier. Okay, how do I pay myself? Well, I'm going to take myself out of the equation. Let's see how that looks, because that's what I like about the spreadsheets. We can start to play with things and say, what if we did this? Or what if we did that? In this case, what if I didn't pay myself on payroll, but I took a draw? So if we go back to cash flow, now we're out of money. But you see here, we run a line of credit up to about 82.90, and then it taps out because it's telling me we're getting to a point of break even, but we still aren't making much money. We're only making about $1,000. And this is where, to that person's question before, we could start paying ourselves, not $100, $1,000. And this is where you want to talk to your accountant about budgeting for a draw, because you're the last to get paid in most cases. But this is where I would also beg the question, well, how much do we need to be at to break even, where we're making no money? And so I want to add you back in. I'm going to add myself back in because I want to be able to pay myself. So I'm going to go back. I'm going to take out what I just did. And, again, we're losing money, right? But the question is, what level of sales do we need to be at to break even? So if you scroll down here, now I'm skipping over, but you have your income statement. All of this will be populated for you automatically. So you don't have to worry about changing any numbers here. Again, if it's white, then it's formulated. But if it's that darker, like peach color, then you can enter in information. But right here, everything is already formulated for you. There's some of these bars. If you had additional inventory, that's where you can plug that stuff in. But I'm skipping down. I want to go to the break-even analysis. Again, as I mentioned, we have 100% margin. Can't sync your changes, please copy. Well, we aren't making any more change. I think I accidentally did a multi-gesture thing here. But we have 100% margin on $94,000 in sales. We have payroll of 120 and operating expenses of basically 50,000. So to run this business the way we budgeted for it, we have this level of expenses. What do we need to basically be selling? We need to be doing about $14,000 a month and in sales. But what does that break down to in terms of students? So I kind of did a little chart down here for you to take the pain out of it. We need to be doing about 100 students in order to afford paying ourselves, all that stuff. We need to be doing about 103 students on average per month. And some months we might have more, some months we might have less, but on average throughout the year, and about 36 students in terms of belt tests. Now, this is where I kind of look to the client and I'd say, do you think you can do that? And the answer is either, yeah, no problem, or, I don't know. And that's where we start having these conversations about, okay, well, if we can't do that, and I kind of jumped the gun. I went and took myself out of payroll first. Let's zero myself out. See, it's not letting me. I'm going to hit revert changes and see what happens. Yeesh. Google, be good to me. All right, let's zero myself out. So it takes us out of payroll. Okay, I was going to say, man, it just eliminated everything. Gosh, gotta love doing this stuff live, right? It would be fun. So let's go down to break even now. Now, if we didn't pay ourselves anything, we still need to be doing about 67 students. So this is where we start having these conversations about, well, what are we going to do? What is it going to take? Because another way, if it might, maybe it just takes a little bit longer for you to get to that level of break even. Then my question would be, how long, right now we only get to 67 students by, if we go back to our sales forecast initially, by about September or August. And that's where we need to have basically cash in the bank or gas in the car to get here. Once we're here, we're good. But until we get there, we need to have enough gas. Just think about it like you're getting in a car. You have enough gas. When you go to let's say you're going for a trip, your first thing you're looking at is that gas. Well, in a business, cash. How much cash do we have? And where can we get more if we need it? You're thinking about those things. I have a family in Baja. There's like about a 3-hour piece of road that has no gas station. And you can bet that when I know where that is and I make sure I fill up, because if I don't fill up, I'm not going to make it to the other gas station. So same kind of thing with business planning. So that's kind of my spiel. From here, it kind of goes a lot of different ways, and you probably have a lot of questions on your mind, but that's where our consulting comes in. It goes, well, what about this? Did you account for that? And no one has the magic 8-ball. I can't shake a magic 8-ball and tell you this is going to work. All we can do is plan and think through to the best of our ability to help guide you. It's not as mathematical as, oh, you're driving a car at 40 pounds or 44 tons and you take this many gallons per mile. It's not. Business is very much an art and a science combined. So anyway, that's my spiel, and the crowd goes wild, I'm sure, right? Sophia, do you have any questions?
We do have one question. Just for clarification, if you open your business as a sole prop and have not hired any employees, you may consider yourself as an employee and you are required to pay unemployment tax, FICA, etc.
First, I'm not a lawyer, but yes, it sounds like you're on the right track. When you make money that's not subject to income tax, like, you're required to, carve out a little bit of, that and be ready to pay that for taxes. And that's kind of goes back to our payroll tab here. Let's see, which is the 6.2 plus this 1.5 gives us 7.65% just at the federal level. So if I make $10,000, as let's say I'm a consultant and I do a job for a consulting gig for the University of Laverne, and they pay me $10,000 and I'm a contractor, a sole proprietor, they're going to just give me $10,000. It's up to me to then carve out that, usually it's about, I would say 15% on the Fed side, it all depends on your tax situation. So all your other income, you got rental properties, spouse, da da da. So it does vary, but yes, a good thing is to carve out a little bit of that money for taxes, and talk to your tax preparer to see if you even need to file what do you call it, quarterly estimates, because Uncle Sam's a pay as you go system, and that doesn't mean you get to wait until the end of the year to pay your income tax. If you hit it big, I think the rule of thumb is like, as long as you paid what you paid last year. Josh, is that right? If you pay what you paid last year, you're kind of in the safe zone. But if you hit the lottery, let's say, Uncle Sam wants their money. So you want to make sure as you're making money, you're saving for tax. I think that's a really important step.
Okay, and then we have another question. Are these sheets available to us to receive offline or in this presentation? And I just want to say you'll have access to these documents. We're going to send it to you to follow up. You can download it as an Excel file if you want to work offline, or make a copy online if you want to work only online. And another question or comment from Leanne. Thank you so much, Sean. This is amazing information. I did get a little lost in a few areas. So the SBDC offered one-on-one work on these sheets to be able to put in our unique information. I would be very interested in truly understanding how all of these sheets work.
Yes, and that's, I would say, a good 70. I don't know what you would say, Sophia or Josh, but I feel like with just about every business at some point in our relationship, we're working on this budget. Because even if you're talking about marketing, you're saying, well, how much are you spending on marketing, and what are your goals for that? It's going to dovetail into the financials, but that's exactly what we're here for. I want to emphasize, we do it with you, not for you. This is where we guide you, just like this. Instead of me sharing my screen, you will be sharing yours, and we're going to say, oh yeah, this goes here, that goes here. You ask your questions, but it's the understanding. So.
And I just want to emphasize, if you want to schedule a one-on-one appointment to meet with a consultant to discuss your financials, have your questions answered, you can give our office a call, or you can send us an email. I put our number and email in the chat. Also, at the end of this webinar, there will be a survey, and you can also enter in your information if you'd like to be contacted to schedule an appointment as well.
Isn't Sophia awesome? I just got to give a round of applause for Sophia, because she makes it so easy not only to learn about our events, but also to engage. And with Zoom and the pandemic, big shout out to Josh and Sophia for everything they do to make these webinars possible, because they're the ones making it happen.
And then one last question. Any quick advice for any new business owners with a startup?
Experience. You gotta get the industry experience. That would be my number one. When I started the SBDC, I had a good 5 years of experience of working in this industry directly that really I relied on. In those 5 years, I was able to build my network, my knowledge base, and my, all that good stuff. So having a good experience in the industry or the business you want to start, probably my number one. Anything else?
Just a lot of thank yous. We're happy to, share this information with you all. If you ever have any questions about our services and how we can help you, give us a call. And as of right now, we don't have any other questions.
All right. Well, thank you all for joining us, and we will see you in 2 weeks for Capitalizing on Instagram. Luis Brewer is one of our consultants that can now take the marketing piece of what we talked about, that $150 a month. Now, how are we going to spend that and really get our mileage out of it? So thank you all for joining us, and we'll see you next time.
Thank you. Bye-bye.
Bye for now.